Assalamu alaikum. Today, I have a very important video for you, perhaps one of the most important videos that I made on this channel. We're going to try and answer the question of whether or not Bitcoin is a good halal investment to make. Ever since Bitcoin has been surging in price as of late, I've started researching Bitcoin, reading everything I could, watching every video I could on the topic, and I think I've had an epiphany. I get it now. I don't think I really got it before, but now I get it. And when I say I get it, I'm not talking about the concept itself. I think I understood that. But I understand now why people are so excited about the potential for appreciation that this unique asset has. Now, I don't want to waste anyone's time, so if you're just here for my conclusion and you aren't necessarily interested in hearing the reasoning behind my conclusion is as follows. I am super bullish on Bitcoin. I obviously think it is a halal investment to make, and I've already started buying Bitcoin. And I'm going to tell you how I've been buying Bitcoin at the end of this video. So if that's what you were looking for, then make sure to leave a like and subscribe before you leave. I'll see you next time, inshallah. As for the rest of you, let's go over my reasoning for why I think Bitcoin is a super promising investment. And let's start with my understanding of what Bitcoin is. Bitcoin is a digital currency invented in 2008. In his first message on the matter, Satoshi Nakamoto says about his new invention on November 1st of 2008, I've been working on a new electronic cash system that's fully peer-to-peer with no trusted third party. The digital nature of Bitcoin is not unique. In fact, 92% of the world's currency is in digital form. That is to say, most of the money that you earn or transact with and use to buy goods and services exists only on computers. Only an estimated 8% of currency worldwide exists in physical form. What is unique about Bitcoin is that it is a decentralized asset with a fixed limit on its supply. Bitcoins are created as a reward for a process called mining, which requires ever-increasing amounts of computing power. The number of Bitcoin created through mining is designed to halve every 4 years, meaning the inflation rate of Bitcoin halves every 4 years until the final Bitcoin has been mined. The number of possible Bitcoins that can ever be mined is limited to 21 million Bitcoins. And the final Bitcoin is projected to be mined in year 2140, so 120 years from now. This is in stark contrast to traditional currencies wherein supply is determined by central banks. The power that central banks have to control the supply of a currency is problematic because this means that these central banks can commit basically legal theft of the purchasing power of the currencies that they issue through something called inflation. So what do I mean by this? Inflation is when the purchasing power of a currency decreases. One of the possible causes of inflation is an increase in the overall money supply. If there is one coconut on an island and the maximum amount that anyone is willing to pay for that coconut is $1, then the price of that coconut is going to be $1. Now, if the central bank comes and dumps a bunch of money into the island economy, and suddenly people have a lot more cash on their hands, then the maximum anyone on that island may be willing to pay for that same coconut may rise to $10. After all, people have more money now, and the number of coconuts has not increased. Consequently, the price of the coconut rises to $10. The downside to what I just described is that if you lived on the island and you had $100 in savings, you may have thought that you had enough money to buy 100 coconuts. But after the central bank made that dump of money into the island's economy, it turns out that you can only buy 10 coconuts with your savings. And now the question is, who stole those 90 coconuts from you? Well, the central bank did when it introduced inflation-causing money into the economy and robbed savers on the island of the purchasing power of their savings. And can you charge the central bank with theft? No, you can't. This is what I mean when I said that the power of central banks to manipulate the money supply of a particular currency makes them able to commit legal theft of the purchasing power of savers that are saving in the currency of the central bank. And now you may be wondering, well, why would a central bank do that? Why would a central bank rob savers of the purchasing power of their currency? Well, one reason is that the government may need the money, and the government doesn't have the money, so they need money to be created. And in modern economies, this money is created through debt, so the government goes into more debt. And so at the end of the day, you have the government robbing their lenders by paying back loans that were given to them in money that has devalued in purchasing power, and doing so by robbing the purchasing power of savers in the currency that they're using. And by the way, this is all a result of using interest-bearing debt to create money, which is a crazy system, subhanallah, and perhaps it is a topic of a future video on this channel. But the bottom line that you need to understand for the purposes of the topic of today's video is that traditional currencies are manipulated by central banks, and recently this manipulation has reached a fevered pitch. If you look at the money supply in the United States, for instance, you discover that money creation has been happening at an alarming rate. We started 2020 with the money supply at close to $15 trillion, and at the end of 2020, the money supply is at $19 trillion. That's a 25% increase. To put this growth in context, the long-term average annual rate of money growth is around 6.24%, so around 5 times slower than it was in 2020. Now you know why asset prices have shot through the roof in 2020. For the same reason that coconuts started selling for $10 in our island economy example. The money supply increased and it has to go somewhere. People are trying to preserve the purchasing power of their money by parking it in assets that are appreciating in price, and rightly so. This has caused virtually all asset prices to become inflated. Stock prices are inflated, commodity prices are inflated, real estate prices are inflated, rare art pieces, their prices are inflated, and basically any other asset that you can think of is currently inflated in price. Investors realize that cash is not a good store of value anymore.
That you have to be in the market full on. And so the question is whether everybody jumps on the train, everybody gets in full on, and then the problem arises that you're talking about.
Most likely.
But then the question is, when do you jump off the train?
But also the question is, what do you jump into when you jump off the train? And the issue is, you can't jump into cash. Cash is trash, okay? Cash is that they're going to, because they're going to print money. What do? You get out.
I agree with legendary investor Ray Dalio. Cash is trash. A pile of cash now is increasingly resembling a melting ice cube. The longer you let it sit, the less of it there is. So this is the general financial landscape that we find ourselves in. Enter Bitcoin. The decentralized nature of Bitcoin and the fact that no one controls its supply and the fact that its supply is capped at a fixed number makes it very appealing for people that are looking for a place to store their wealth, the purchasing power of their money, and can't find any other reasonably priced, reasonably liquid assets to park their savings into. Right now, everything is expensive, so people are buying up Bitcoin. What makes the price dynamic of Bitcoin unique compared to other assets is the fact that the higher the price of Bitcoin becomes, at least in my mind, the less risky it becomes, because the more legitimacy there is to the claim that Bitcoin is a good store of value. So I'm actually not really interested in Bitcoin functioning as a currency. I'm more interested in Bitcoin's potential to be the preferred method that people use to store value. Now you may ask, well, can't other cryptocurrencies be created that are limited in supply and decentralized in terms of who controls them? Well, yes, other cryptocurrencies can be created, and they have been created. However, what is unique about Bitcoin is that not only is it a decentralized asset with a limited supply, but it is those things, and it enjoys widespread recognition and acceptance. There's a large number of people that are plugged into the Bitcoin software. That's really where the value of Bitcoin lies. Take, for example, Facebook. The software that Facebook runs on isn't really that groundbreaking. The software is now what makes Facebook currently worth around $800 billion. What is valuable about Facebook is the fact that there's around 3 billion people worldwide that are connected to the Facebook software. And Google had to learn this the hard way, because Google tried to make Google Plus, if you remember, and they tried to compete with Facebook and create their own social network, but they came out with Google Plus and no one cared because not enough people were connected to Google's social network and were interacting with each other through Google's social network for the social network to be of any value. So it completely flopped and Google ended up closing that project down. Similarly with cryptocurrencies, other cryptocurrencies have attempted to reach the type of scale that Bitcoin has reached, but a lot of them have either become worthless or very close to worthless because not enough people were using those cryptocurrencies for anyone to care. If you look at Bitcoin right now, it has a market cap of around $500 billion, trading at $30,000 per coin. If you look at the second largest cryptocurrency, Ethereum, the market cap of that cryptocurrency is around $40 billion, so less than 1/10 the market cap that Bitcoin has. So it's going to be really hard for any other cryptocurrency to make as strong an argument as Bitcoin in terms of its ability to function as a store of value. And guess what? Because of this, more people are going to be attracted to Bitcoin, which is going to drive the price up even more, which will add further legitimacy to the view that Bitcoin can function as a good store of value, which is going to attract even more people, and so on and so forth. And I really think that right now we're at the beginning part of this virtuous cycle that is going to take Bitcoin's price, I predict, at least 10 to 20 times where it is right now over the next 5 to 10 years. Now, where did I come up with this 10 to 20 times number? Well, if you look at gold, gold has a market cap of around $10 trillion. And yet I think Bitcoin is a better store of value for practical purposes than gold is. Gold doesn't have a hard cap on its supply like Bitcoin does. In fact, when the price of gold goes up, more investment goes into mining gold, but any additional amount of investment into mining Bitcoin is not going to speed up the process of Bitcoin mining, and it's not going to increase the number of Bitcoins out there. You can divide Bitcoin into as small of units as you want, basically, and you can transact in these much smaller units. You can't do that with gold. Bitcoin is easily transferred between parties. You don't need a physical location to store Bitcoin like you do with gold. And Bitcoin's features are continuously improving. So why wouldn't it reach the market cap of gold? It just makes a lot of sense, to me at least, that it will. Currently, as we mentioned, it has a market cap of around 500 billion. It's trading at around $30,000 per coin, as of the date of this video at least. Now, keep in mind you don't have to buy an entire coin. In fact, you can buy in almost any dollar amount. This means from here, from 30,000 to 10 trillion, there is a 20 times increase. And I think this may not even be the end of its bull run. Last year, around this time, I said that Tesla was my #1 halal stock pick. And alhamdulillah, that turned out very well. In 2020, Tesla has increased more than tenfold in value. And by the way, Tesla still is my #1 halal stock pick. I still think that there's a lot of meat left on the Tesla bone. I think there's a lot of price appreciation still to be had with Tesla. Again, this is my investment thesis. Make sure you do your own due diligence. This year, I'm going to say that my #1 non-stock halal asset pick is Bitcoin. I have decided to allocate at least 5% of my portfolio to Bitcoin. I'm going to dollar cost average my way into my position, and I've already started buying Bitcoin. I may even increase that percentage to 10% of my portfolio. We'll see what happens. The biggest threat to Bitcoin, as I see it, is adverse regulations, and that's what is holding me back from committing even more. I do think that the entry of serious players like PayPal and Square reduces the risk of adverse regulations, but that isn't necessarily the case. Perhaps I'm wrong. I also think that if these adverse regulations that were going to end Bitcoin were going to come, they would have already came. It's now 12 years since Bitcoin has been invented, and it has survived basically all of the doubts that have been levied against it, and it's now at the highest price that it's ever been. By the way, if you want to know my investment moves before I make them, again, go to halalinvestors.com. If you're watching this before January 1st of 2021, then just add yourself to the wait list. If you're watching this after January 1st, 2021, then go to halalinvestors.com and become a premium member to be notified of my investment moves before I make them. As for the halalness of Bitcoin, I did make a video on this topic, link in the description if you're interested. But very briefly, I found no evidence in the Quran or Sunnah that suggests that using something similar to Bitcoin is haram. Additionally, claiming that gold and silver are the preferred currencies in Islam or the preferred stores of value in Islam, just because they were mentioned in the Quran, is like saying that camels and horses are the preferred modes of transportation in Islam because, after all, they too were mentioned in the Quran. It's not a serious argument. As far as use of Bitcoin to facilitate illegal transactions, it's very hard to estimate how much of Bitcoin transactions involve illegal activity. But what I can say pretty confidently is that as the acceptance of Bitcoin becomes more widespread, this percentage is going to decline. And especially given the fact that much more opaque cryptocurrencies are being invented for that purpose, I also think that if you own a Bitcoin, you are responsible for what you do with that Bitcoin. You're not responsible for what other people do with Bitcoins they own. Like if I owned a knife, I'm not responsible if someone else who owns a different knife uses it to stab someone. My owning of a knife did not make it easier for that other person to do something unethical with their knife. And similarly, my owning of a Bitcoin doesn't make it easier or harder for someone else to transact in the Bitcoin that they own and involve it in illegal activity, unless of course they're transacting with me, in which case, yes, I am responsible. But if I have nothing to do with this transaction, then I don't think that I'm ethically responsible for it. I mean, similar with traditional currency. Traditional currency is used in illegal activity. Just because I hold US dollar, for example. That doesn't mean I'm enabling other people to use the US dollar for illegal activity. So I also think that that argument doesn't hold any merit either. And as always, I welcome any opposing views on this matter. Now, how I am buying Bitcoin. I'm in the US, so I can use Cash App to buy Bitcoin. I think it's a really convenient way to do so. If you use the link in the description to this video, you'll get $5 when you sign up. Additionally, I've used Coinbase since 2017 and I've had a good experience with it. So if you're outside the United States, and I know that Coinbase is available outside the United States, so that's also an option that I'm familiar with that I've had no issues with. If you use the link in the description, you'll get $10 when you sign up. And I think you have to deposit $100 or buy $100 worth of Bitcoin to get the $10. I think so. Check the terms. But anyway, links to Cash App and Coinbase are in the description to this video. And there are some incentives when you use the links in the description of this video. Cash App, again, is for if you're in the United States, you can use it. I don't think that if you're outside the United States, you can use it. If you're outside the United States, depending on which country, Coinbase may be available to you. And I've had a good experience with Coinbase. I also know that Coinbase is one of the more secure places to buy Bitcoin. Now, having said all this, Coinbase and Cash App, while they may be good places to buy Bitcoin, eventually, if the value of your Bitcoin starts getting up there, you're starting to get in the tens of thousands of dollars range, then you might want to secure your Bitcoin with something like a hardware wallet. And this is a topic that I may cover in future videos. Again, everything I've said in this video is my personal opinion on the matters addressed. They are not personalized investment advice. Never invest money that you can't afford to lose. Only invest after you've done your own due diligence on whatever asset you're thinking of buying. I hope I've been able to be beneficial to you through this video. Again, check out Halal Investors. You're going to see all my insights, all my halalness reports on halalinvestors.com. If you liked anything in this video, I'd really appreciate a like and subscribe for more content. Until next time, make sure to take care of yourself. Assalamu alaikum and peace be upon you all.